Cardano is sitting at the edge of something massive. The price has been pushing higher, smashing through key technical levels, and now it's pressing against the walls of a triangle pattern that traders have been watching like hawks. Add to that the rising bullish bets in derivatives markets and a looming ETF decision from the SEC, and suddenly, ADA looks like it's about to detonate. But the real question is this: is Cardano about to finally step out of Bitcoin's shadow and rocket toward the $5 mark, or even beyond? Stick with me because the data, the charts, and the upcoming catalysts are painting a picture that could make the next few weeks historic for ADA holders. At press time, Cardano is trading just above 90 cents, hovering close to the resistance trend line of a symmetrical triangle pattern on the daily chart. If you're familiar with crypto technical setups, you know this is no small detail. Symmetrical triangles are like coiled springs. They build tension, consolidate, and when they snap, they usually snap big. This setup comes at a time when Cardano isn't just fighting for price action, it's also fighting for relevance in an increasingly crowded altcoin market. Projects like Solana, Sui, and Sei are gobbling up headlines and market share. Meanwhile, critics have dismissed Cardano as a ghost chain with few active apps and limited stablecoin traction. And yet, against that backdrop, something is shifting. We've got bullish, open interest climbing, long positions swelling, technical indicators flashing green, and, let's not ignore the elephant, the SEC circling October with a potential ETF approval that could pour institutional capital into ADA. Let's rewind for a moment to Charles Hoskinson, the ever-outspoken founder of Cardano. This week he took a public stand by showing support for Ergo, a proof-of-work blockchain that's been under pressure after centralized exchange. HTX reportedly demanded $100,000 in marketing fees. When Ergo refused, they were delisted. Hoskinson wasn't having it. He proposed a partner chain development, offering Ergo the ability to leverage Cardano's infrastructure for merged mining. Think about that for a second. Miners getting dual rewards, faster transactions, and expanded demand for both chains. It wasn't just a symbolic gesture, it was a statement about decentralization, liquidity, and the future of smaller projects that are often suffocated by centralized giants. And here's where it gets interesting. As that announcement hit, ADA's price ticked higher, up nearly 4% in a single day. That correlation wasn't lost on traders, and it feeds directly into the broader bullish narrative that's now gaining momentum. Now, if you really want to know where smart money is positioning, you don't just look at spot price, you look at derivatives. And right now, the ADA derivatives market is buzzing. According to CoinGlass data, ADA's open interest has jumped from $1.78 billion to $1.87 billion practically overnight. That's a surge of fresh capital flowing into the system, a clear sign that traders are placing their chips on the table in anticipation of a breakout. But it doesn't stop there. The long-short ratio is tilting bullish, with taker-buy volume climbing to over 51% from just 47% earlier in the week. That shift in sentiment shows traders are not only betting long, they're doing it with size. These numbers don't move on hype alone, they move when confidence builds. Zooming back into the charts, Cardano has now logged 4 consecutive days of gains. It has already cleared the 200-day EMA and the 50% Fibonacci retracement level at around $0.9182. The next big test? The overhead trend line of the symmetrical triangle sitting close to 95 cents. A decisive daily close above that level would confirm the breakout, setting ADA up to target the golden 61.8% Fibonacci retracement at $1.0145. The relative strength index is holding around 60, above neutral but not yet in overbought territory. That gives ADA room to climb. Meanwhile, the MACD is steadily rising, with green histogram bars signaling growing bullish momentum. Of course, the bears aren't out of the picture. If ADA fails to break out and falls back below $0.9182, the decline could deepen toward the 50-day EMA at $0.8472. And that's why this moment is so critical. It's a knife's edge. Now let's talk about the catalyst that could send ADA parabolic, the SEC's decision on the Grayscale Cardano ETF. The SEC has already approved multiple spot Ethereum ETFs this year, with financial giants like BlackRock and Franklin Templeton leading the charge. That sets a precedent. Cardano is next in line, with the final approval deadline scheduled for October. And here's where the betting markets get spicy. According to Polymarket, the odds of approval before that deadline have surged to 87%. That's not speculation. That's serious money being wagered on regulatory green lights. If approved, an ADA ETF would unlock access for institutional investors, retirement accounts, and funds that currently can't touch ADA directly. That influx of capital could be the spark that turns a technical breakout into a full-blown parabolic run. Crypto analyst Javan Marks recently suggested that ADA could surge over 432% from current levels. That would take Cardano above $5, and in a strong breakout scenario, even closer to $8. Why those numbers? It's not random. They're rooted in historical resistance levels and Fibonacci extensions. If ADA clears the key resistance zones around $1 and $1.50, momentum could carry it into the multi-dollar range. And remember, crypto moves in waves. Once momentum builds, it often feeds on itself, drawing in new traders and sparking media coverage. Let's also consider the broader market cycle. Bitcoin has been consolidating, which historically opens the door for altcoin season. We've seen this movie before. Bitcoin rallies, then cools off, and altcoins surge as traders rotate profits. If that pattern repeats, ADA is well positioned to ride the next wave. Combine that with ETF speculation, Hoskinson's ecosystem expansion plays, and technical indicators all leaning bullish, and suddenly the narrative shifts from ghost chain to comeback story. But let's keep it balanced. There are still risks. ADA's RSI shows hints of a downtrend, which could foreshadow a reversal. Failure to confirm the triangle breakout could drag the price back toward 85 cents or lower. And while ETF approval looks likely, the SEC has surprised markets before. So yes, ADA has the setup for a massive breakout, but traders should stay alert, use proper risk management, and remember that volatility cuts both ways. At its core, Cardano's story has always been about long-term vision over short-term hype. Critics may call it slow, but sometimes slow builds last longer. If the coming weeks deliver a confirmed breakout, an ETF approval and renewed developer activity through partnerships like Ergo, ADA could flip from underdog to market leader faster than many expect. And for long-term holders, this could be the beginning of the narrative shift they've been waiting for. So here's where we are. Cardano is pressing against a critical resistance level, traders are betting big on a breakout, and the SEC's looming ETF decision could be the game changer. The next few weeks will decide whether ADA remains stuck in consolidation or rockets into the $5+ conversation. I'll be keeping a close eye on ADA's technicals, derivatives market data, and regulatory updates. If you don't want to miss what happens next, make sure you're subscribed and tuned in. Thanks for watching. If you enjoyed this breakdown, hit that like button, drop your ADA price prediction in the comments, and check out my other videos on altcoin opportunities while Bitcoin consolidates. And remember, this is not financial advice. Always do your own research before investing in any cryptocurrency.